Evening. Today I have an update with regards to a stock which is called United Drilling Tools Limited. It hit an upper circuit of 20% yesterday, which was on the 16th of June, and therefore this stock came into news with that. Today it's down about 5%, which means that overall it had gained about 25% in the last 5 days, and people have sold some of their stake and booked some profit, which is the reason why it is showing about 20% up in the last 5 days. So overall, in the last 1 month, it has a 16% positive return. Over the past 6 months, the company is trending at a negative 18%, and over the last 1 year, the company has just added 0.24% gain. So again, the market corrections in October, November have impacted the stock price, where the company which could have easily had a 20% value add in the year, because of the stock market correction that we had, the value eroded there. So company incorporated in 1985, United Drilling Tools Limited is the production and sale of oil drilling tools and equipments. Company price is 236, high of 295, low of 184. Price to earnings ratio of 32, which is slightly high. 130 is the book value, so current price is almost 1.6 times its book value. So it's a uh, very good buy as compared to the price that is being offered. Dividend yield of 0.76%, return on equity about 5.8%, and return on capital is about 7.72%. Compared to the market sentiment, the returns are low. However, if the company is able to have a high amount of volume growth and profit growth, then definitely uh, the company should be able to do well in the long run. Face value is 10 rupees. Company has given a poor sales growth of 9% in the last 5 years. So again, this is a negative sentiment here. So low return on equity, again 4.5%. This has been consistently over the last 3 years. Company has high debtor days of 185 days. So company is inefficient in managing its operations, and the company has high debtor days. That means the company is not getting paid by its creditors or by its customers on time, and that is the reason why it's impacting the overall financials of the company. So the sales revenue has been on the downward trend in the last 3 quarters, which is definitely a big sentiment to impact the overall price of the stock. Net profit has picked up after a poor December quarter, so something that the company should be looking forward to, keeping and managing. Sales over the last 4 years, though it fell in 2023, it has managed to pick up in the last 2 years, which is a good sign. Though the net profit, which stood at 50 crores in FY22, now stands at only 15 crores. So it is a bit of a concern, a big concern, in fact, rather, because the profits are not improving. Even though the sales has grown, the company was possibly making losses in the past. Now seems to started making profit, which is a good sign. Stock price growth of minus 17% in the last 3 years. So that means the company has lost about 17-18% overall in the last 3 years on a cumulative basis, which is suggesting nearly 50% drop in value over the last 3 years. So again, it's a big drop. Company needs to improve its revenue growth and profit growth, which would bring the company back into uh, the kind of value that it had in the past. So again, return on equity has dropped in the last 3-4 years. Earlier, it had a cumulative average of about 10 to 12% over the 5 to 10-year period time. Reserves have grown little by little in the last 3 4 years. Borrowings have increased, which is a cause of concern. Higher borrowings would lead to higher interest costs, which would impact the profitability of the company. Then you can see that it is in the last 2 years. There's about 70 to 80% increase in the time the debtors are taking to make payments. Inventories have reduced, which is a good sign in the last 3 years. Then days payable have improved. Company is able to manage its operations better. Cash conversion cycle again is pretty high, 572 days, which would suggest that the company that manufactures the tools has a high time taken to convert into cash. So a long work in progress requirement for a high value industrial equipment. So promoter holding is about 75%, which is steady in the last 1 year. You can see over the last, in fact, it's been steady since the last 3 years. Then foreign institutional investors have reduced their stake 0.4%. Direct institutional investors have hardly any sort of position holding here. Public holding is about 25%, which can easily impact the stock price in terms of price volatility and also in terms of volumes. It can easily slip into the oversold zone, so something that the company would need to keep track of. So this company has secured a 107 crore order from ONGC. The market cap of 490 crores. The shares went up 20% because of this 107 crore order. So if you compare the 107 crore order that they've got, uh, their overall yearly revenue. Yearly revenue is ranging from 140 to 170 crores. So it's almost about 3 quarters of a year, or say about half year revenue through one order. So again, it depends on how long they take to complete this order and what sort of other project orders that the company has, which would suggest to a growth in the overall profitability and the value of the company. So, received a significant order from Oil and Natural Gas Corporation, most esteemed PSUs of the public oil and gas sector. Involves supply of large outer diameter casting pipes with connectors. The execution contract is 9 months, so definitely this whole contract should be realized within FY26, which would mean that there is a good chance for the company to grow its overall revenue. Current stake is about 170 crores, and that can easily have at least another 20% growth there. Maybe the company should be targeting at least a 200 and 225 crore revenue for FY26. So again, these are the financials we've just been through. Important to keep in mind the disclaimer. This information is extracted from the internet from one of the resources there. So investment expert advice and rating agencies are responsible for these recommendations. There is no personal opinion or advice. Stock market investments carry inherent risk of financial loss. Investors must exercise their own judgment and conduct proper due diligence. The author bears no responsibility for any losses resulting from the decisions based on this article. It is strongly recommended to consult a qualified financial advisor before making any investment decisions. Another order, 164 crore order received by HBL Engineering Limited from South Central Railway. So this is one of the uh, comparisons we did HBL versus Zebrex yesterday, in which it's HBL produces batteries and it has a traffic controlling and monitoring system specially designed for the railways. So this is a company who's got another order from the South Central Railway. So the company seems well to do well over the next 12 months here. It is one of the companies that has got business with regards to upgrading the Kavach versions from version 3.2 to version 4. The Kavach system in the Vijayawada Balchar section would be upgraded with regards to this contract. So something as an FYI, not supposed to be covered in this video. However, since you saw the order book and the value of the contract is something that I covered. So thanks for watching, friends. Please share this video with your friends, family, and associates so that they could benefit from this information. Please share your update in regards to improving the content and the presentation of this video. So thank you once again for watching. Connect with another video very soon. Take care. Have a good day. Thank you.